What's up everyone, it's Karthik with MoneyVest. This is going to be your video on Tesla, Palantir, Nvidia, and SoFi. I'm going to give you guys both a fundamental and technical overview on these four companies. These are four stocks that I personally own in both my long-term and my options portfolio. They are stocks that have recently been selling off, so they are in a correction slash a bear market slash a pullback, depending on which stock we're talking about. So in this video, I'm going to break down the forward multiples. That's going to give us a little bit of an idea on where these stocks are currently trading from a valuation perspective. I'm going to go over my technical support and resistance levels, the overall trend, the fair value, and what I'm planning to do with these companies. So stay tuned. Make sure that you drop a like, subscribe to the channel. And again, links to our Discord and Patreon is going to be down below if you're interested in joining us. We've actually introduced a brand new additional 20% annual discount for the first year. So this expires in 3 days. So if you want to take advantage of that, link's going to be down below. Once you essentially pay annually, the subscription is going to come down dramatically to just 19 bucks a month. And that gives you access to pretty much everything, including the MoneyVest website, the trade alerts, options portfolio updates, long-term portfolio updates, all the channels within Discord as well. So link's going to be down below. We'd love to have you on board. And again, this 20% annual discount, which is additional, is going to expire in 3 days. So take advantage of it while it's still available. Please do not message me once it's over because I won't be able to create a new discount for at least a few weeks because Patreon doesn't allow me. So again, link's going to be down below if you want to join. And of course, get access to everything. So first things first, let's talk a little bit about my positions. And before we actually get into this spreadsheet, which I've created for all of you, I want to go over some of the market thresholds. And these also do apply for individual stocks as well. So what this basically means that if a ETF, index, or stock, or whatever it is that you're looking at, cryptos, futures, commodities, whatever, if it's down over 0 to 5% from its all-time highs, it is considered to be in a quote-unquote dip. And the reason why we call this a dip is because 5% from its all-time highs is actually a very, very small amount. And the markets can be in an uptrend and still pull back or basically be in a dip by 5%. It's not a big deal. It's not going to break the market. It's still going to continue with that uptrend. Now, it's not until after a 5% sell-off, but still less than 10%, is when we consider that ETF or index or commodity or stock or whatever you're looking at to be in a pullback. And that pullback can also be well within the context of an uptrend. The uptrend basically breaks after we are into a correction, and correction happens when whatever you're looking at, again, stock, ETF, index, commodity, is down over 10%, but less than 20% from all-time highs. All of these numbers are in relative terms to all-time highs. And a bear market is achieved when it's down over 20% from all-time highs, and then a full-blown crash is when that ETF or index or stock or whatever is down over 50% from its all-time highs. So a lot of these stocks that we're going over in their lifetime at one point have been down. All of these numbers, they've been down over 5, 10, 20, 30, 40, 50, 60, as much as 70% at one point from their all-time highs. So where are we today? So if you take a look at this right here, this is the percentage drawdown compared to their all-time highs. And that's the current status for where these stocks are trading. I've also included for when the earnings are coming out for these companies. So the first company to report is going to be SoFi, coming out on January 27th. 2 days later is going to be Tesla, January 29th. And then in February, we've got Palantir on the 12th and Nvidia on the 26th. So Nvidia is down about 8.5% from its all-time highs. It's actually crazy to think that because it was literally hitting an all-time high after the CES event and then just got sold off aggressively, over $200 billion sell-off in one single day. And it's now down 8.5% from its all-time high. So it's over 5%, but less than 10%. So it's in a pullback. Tesla is in a correction. It was at one point in a bear market since it was down in the 390s, 380s even. I think it came down to 370s actually. So it was in a full-blown bear market, but right now it is in a correction because it is less than 20% from its all-time highs. Same thing with Palantir. It's in a correction because it's now down over 19% from its all-time highs, considering that it broke down below 70 bucks. And SoFi has been in a bear market for a really long time because it hasn't really been able to recapture its all-time highs from back in 2021. All these three stocks have made new all-time highs, in 2024, 2025, but SoFi is kind of like that lone stock here, which is still yet to recapture its all-time highs. Now, where are we in terms of these forward multiples? Well, if you take a look at Nvidia, I would say Nvidia is probably the only stock, I guess maybe even SoFi, that is somewhat okay in terms of its pricing. And the way we look at these valuation multiples is there are some general thresholds that I think we really need to understand. You can compare this valuation multiple to the market, which is to say that, okay, the S&P 500 is trading at 5 times sales and 25 times earnings, right? So you can kind of compare these stocks relative to the market. Are they super expensive or super cheap relative to the market? Or you can compare them relative to their own industries. But what's also interesting is that a lot of these companies are actually doing something that's never been done before, right? Nvidia is entering different industries and spaces that's never been done before. Tesla is building humanoid robots, FSD, autonomous driving, that's never been done before. Palantir with their software and their data analytics, things that have never been done before. And SoFi also with their fintech offerings with Galileo, technology platform, lending platform, things that have never been done before. Yes, you can find overlaps. You can find companies that are somewhat close to what these companies are doing. But at the bottom line is that these are very different companies that are very difficult to comp, right? In other words, it's very difficult to have companies that are going to be very close to these ones that you can compare against. But at the same time, there is at least some idea, some understanding of where the valuation ideally should be for it to be trading at a reasonable level versus exuberant levels. And so I can tell you that Tesla, Palantir, by all means, are trading at very expensive valuations. And again, this is just me being very objective, even though I own both stocks here. But you can also tell, by looking at these valuations yourself. I mean, take a look, 93 times earnings for Tesla on a forward basis, 124 times earnings for Palantir on a forward basis. What's also crazy for Palantir, though, is the price to sales multiple, like a 58, 59 times sales. It is ridiculous. At one point, it was trading at over 70 to 80, right? So the fact that it's almost down almost 20% from its all-time highs obviously has brought down the price to sales multiple, but still, even after almost a 20% sell-off, a 58 times sales is ridiculous. 13 times sales for Tesla is arguably expensive. I mean, it is not a full-blown software stock as of yet, right? Majority of the revenues are still dependent on their hardware, which is electric vehicles. That's what they're selling right now. So 13 times sales, you could argue, is a little bit up there. Now, Nvidia, 32 times earnings is actually okay, but price to sales is definitely very high. And so the reason for this discrepancy between earnings and sales for Nvidia is because of the higher margins. Because of the fact that the company's got such insane margins, their revenue is almost equivalent to their profit. I mean, they've got a 70 to 75, 80% profit margin. And as a result, there's not a lot of gap between their earnings and their sales multiple. And so eventually, I do expect for their sales multiple to kind of normalize somewhere in the teens, even though their price to earnings multiple is okay. Like 32 times earnings, I don't mind paying that much for Nvidia even today. When it's trading near all-time highs, like only 8.5% from its all-time highs. I don't mind paying that much for Nvidia at those prices. And so, obviously I like to go with a little bit more conservative analysis. I've got my shopping list on our MoneyVest platform. So if you actually do get access to this with the additional 20% discount, you can come over here. There's going to be my shopping list right about here. I update this shopping list every single quarter. So I basically go over brand new stocks that I believe are high quality with my buy targets, including my fair value, my light buys, heavy buys, and my no-brainer buy targets also included in this shopping list. So you can pretty much access this on our MoneyVest platform. But these are some of the fair values that I have for these stocks. And again, this is based on super conservative, lower P multiples, lower than analysts expected growth rates for these companies, because it's going to build that margin of safety. And so for Nvidia, it's going to be under $100. For Tesla, it's going to be $215. Palantir is about $27. SoFi is $10. Now, I want to be very clear that these are not price targets. These are not targets where I'm putting down on these companies that they're going to come down to these levels. No, these are fair values. There's a huge difference between price targets and fair values. Price targets are your actual targets, where you're expecting for the stock price to get up to or get down to. Fair values are what you believe the current fair value for that company is, and where you'd be comfortable buying that stock. If it comes down to that level, great. You can deploy capital, you can buy more shares. If it doesn't, that's okay. That's completely okay, because there's a lot of other stocks in the market that you can trade and invest in. And at the same time, there's also an element of technicals, which is the support and resistance levels. So for Nvidia, I've got a support at 132. That's why I've sold a put at 133, which you can see right over here. I'll go over the options in just a minute. We got Tesla support at 375. Super important for Tesla to validate this level for the bulls to really step in at 375. If for whatever reason we break down further, then I do believe low 300s is a very realistic possibility. $60 for Palantir is the support, and $14, $13.75 close to that level is the support for SoFi. Now, in terms of the trends, and I'll go over the technicals in just a minute, you've got a sideways consolidation pattern for NVIDIA. So that's going to be NVIDIA right there. You've got a downtrend on both Tesla and SoFi, which is very clear to see. I've mentioned that in my previous videos. And for Palantir, it is now starting to break down from that area of support, which we talked about, which was $70. So I'll go over the charts here in just a couple minutes, but I really want to go over what I'm planning to do with my options. So I've got Palantir 120 calls that are expiring in December of this year. December or November? Let me just quickly take a look here. Actually, 2026 January. So they're actually January calls. $120 January calls, because I don't think Palantir has a December expiration, which is kind of weird. But I'm already up like close to 31% on this, just under $600. So the moment this one crosses over 50%, I will most likely be closing this one out for whatever profit I can capture. And then we'll be opening new ones. And for that to happen, of course, a Palantir would have to be lower, because this is acting as a hedge. Now, if Palantir gets up to $120, great. I'll be able to get rid of some of my shares for an enormous profit. And of course, keep the entire premium regardless of what happens. But with this call, it's a hedge. So if Palantir continues to sell off, this is going to go up in value, and I will be closing these out at close to 50 to 60% profit. Same thing with Tesla calls. I've got $800 and $850 calls, which I've already mentioned. Collectively, I'm up just over $4,400 on these, 48% on this one, 35% on this one. And again, the threshold for me is 50 to 60%, might even be higher, depending on how these stocks trade. If you break down below 375 for Tesla, I will be looking to close both of these out, and will sell new ones at a lower strike. So I may not go with 800, 850. I might actually pick 700 and 750, same expiration, collect whatever premiums I can collect, because of that potential for further downside if you break down that 375 support. Now for NVIDIA, I've actually got a $133 put, which is up 73%. So I will be closing this one out on Friday. Today the markets are closed in observance of Jimmy Carter's funeral. So this one I will be closing out on Friday. $133 put. That is up 73%. I actually started this position just a day ago, like when NVIDIA was selling off after the CES event. And then of course I've got the calls at 140. Which are currently up over 3.6%. This has been a part of the big rolling strategy. This is expiring in September, and right now just up over 3%. And that's exactly one of the reasons why it is so important for you to learn how to hedge properly and understand why it's so important to sell calls, sell puts, so you can actually generate some premiums and credits, while also allowing for the stock price to do its crazy volatility thing, whatever it wants to do, whether it wants to trade sideways, downtrend, uptrend, whatever it is. This is super helpful. I've also got SoFi calls at $16 that are now up, I think, over 80%, which I will also be closing out. And the plan would be to sell new puts on NVIDIA and SoFi. And the reason why I'm picking those two stocks for selling puts is because of what I mentioned earlier in terms of valuations. So those are the two stocks where between the four of them, I believe NVIDIA, SoFi actually offer better risk-reward ratio, better valuations, as opposed to these two, where I'm only going to be focusing on selling calls right now. If the valuation readjusts down to a level where I feel comfortable, that's when I will be looking at selling puts on these two moving forward. So hopefully that gives you a little bit of an idea on what I'm planning to do, selling puts on NVIDIA and SoFi to accumulate more shares, and selling calls on Palantir and Tesla to continue to hedge for if and when we actually break down below certain levels. Now let's get into the technicals. And as I already mentioned, the support and resistances, this is the downtrending channel for SoFi. So you can see that it's been trading inside this sort of lower highs and lower low level. And this is going to be that support roughly in the $13.50 to $14 per share. And of course, a very strong resistance right here is $17. And there's going to be another level here at $16.50. And it really needs to break out above this downtrending channel in order for us to see any type of momentum back higher for SoFi. But in case we see some more downside, I will be selling puts all day long in the $11, $12, $13 range for SoFi. And again, all these trade alerts will be shared in our Discord. So again, if you want to join, link's going to be down below with that additional 20% discount. For Palantir, This right here is the breakdown. So we're seeing this lower high and lower low. Also, a little bit of a falling wedge. We broke down below this level, which was a very critical area of support for Palantir. And it's now, you can see that it's struggling to break back above this level of $70. Failed on Wednesday. 69.53 was the high for Wednesday. So we'll see what happens on Friday if you're able to recapture this level once again. The probability is high. I'm going to be honest. The probability is actually quite good that Palantir rallies on Friday. The reason being is because we are still within the context of this downtrend. So it'll only make sense for it to get back up to this lower high before kind of coiling inside this falling wedge. But again, that's purely speculation. I'm not going to predict the stock here, but really tell you how to protect, how to hedge, and where the opportunities are if and when, of course, certain prices get hit. So keep a close eye at $70. That's going to be the resistance for Palantir on Friday, and much stronger support sitting right about here in the low 60s again. Talking about NVIDIA, and NVIDIA, of course, 2 back-to-back pretty red days. And this right here is now the new resistance that we're watching. Support level is going to stay put here in the low 130s. That's exactly why I ended up selling puts in and around those levels. And I've also got 140 calls, which are pretty much at the money right now. So we'll see what happens with NVIDIA over the course of next several months, whether it's able to trade back above 150, 160s, or if it's going to sell off even further, giving us a better buying opportunity for this beautiful stock for the long term, in my opinion. And finally, we come over to Tesla. And Tesla also in this downtrend, as we have discussed, a very strong support sitting right about here, 375. And I wouldn't be long. All my long bets are off until after it takes off 425. I think that's a very important resistance level for Tesla, considering the downtrending channel within which it's been trading right now. So hope you all enjoyed this video and a complete update on the markets. Again, if you want to get access to all the trade alerts, a link's going to be down below if you are interested with that additional 20% annual discount available for 3 more days. Let me know your thoughts down in the comment section below. And as always, happy investing. I'll see you all in the next video.